This is Cary with Wicked Signal and another video analysis, this one on Science Applications International Corporation, or symbol SAIC, recorded January 24th, 2021. Before I jump into the signal and a little bit about the company itself, I just want to remind you to tell your investor and trader friends to go to wickedsignal.com, click on the free subscription link, first name, last name, email address, and you or they will receive an email each and every time a new video is ready for viewing. I won't, fill your email inbox with all kinds of marketing offers, and I will not share your personal information with anyone outside the organization. So let's jump into SAIC, Science Applications International Corporation. If you don't know anything about this company, you can be forgiven. I wasn't fully aware of it myself. It is headquartered in Reston, Virginia. If you go to Wikipedia, you'll see that in just very plain generic provides government services and information technology support, essentially for the federal government. This was a company that actually was originally created in 1969, and then in 2013 it spun off a $4 billion unit which retained its name SAIC, while the parent company changed its name to Leidos. Personally, I think this is a company that's heavily involved in the intelligence industry through classified contracts, cleared personnel, and robust security infrastructure. And so, given what's happened recently with the hacking that has happened with regard to supposedly the Russian intelligence, so forth and so on, I'm assuming that the rally here, the strength of this stock, is in part based upon the likelihood that there'll be more investment in infrastructure security, for the federal government, and especially with regard to the intelligence community. So we'll take a look at the chart here. I'm just giving you kind of the extremes since it spun off in 2013. Its low was 30.19. 2017 got up in the upper 80s at 89.87, and there was lots of rotational highs and lows inside that, but there were two big extremes here that you can see in 2020. The early year high was 96.80, then fell to what I keep calling the COVID low of 45.45, and since then it's recently pushed on to new highs, most recently 101.89 in late January of 2021. And so what I'm seeing here is a channel structure that we settled above for the first time last week. And this week, it's at 99.42. The stock settled at 100.90 last week, well above that 99.42 formation, beyond the 1% violation threshold. So this is a quote-unquote good buy signal. It's a valid buy signal. 99.42 is the base of support. That formation rises a full 4 weeks later, the week of Monday, February 22nd, to 99.61. And so you can subtract those out, divide by 4, and you'll know where that channel structure is each and every week. In fact, you could continue forecasting that channel location, in infinity, actually, all the way through 2021 if you just do that simple math. So you can keep track of this. If this stock pulls away to the upside and continues moving higher, which I'm expecting it to, then you can follow the location of what I consider to be long-term support through the rest of the year, presently in the $99 handle, if you will. It'll push into the 100 handle, if you will, as we continue into summer trade, so forth and so on. So where is this stock going? We are in uncharted territory. We've not been here before. And I always look at big picture, like, long term. And, we traded inside the range of this channel formation over the course of the last full year of trade. And so we could, over the next full year of trade, rally in the area of about a 50% rally from present levels. The full channel extension, which I use as a targeting mechanism longer term, is at 151 even the month of February. I also like the fact that you've got kind of an ABC count, A minus B plus a full 100% swing to the upside is 148.15. Once again, roughly 50% gains from where we presently are. And So that's that. And that really is sort of the bigger picture. Now, in the intermediate term, over the few months, 3 to 5 months, 6 months, difficult to ascertain, obviously. I do think that this channel top that's rising weekly is in reach, and it is one that can contain, I'm going to say, quarterly buying pressures if or when tested. So holding above 99.42, let's just say an end of Q2 objective perhaps, in the 123.89 to 127.27 region. I've given you those numbers. That is this week, the week of January 25th at 123.89. You could subtract those two out, divide by 4, and once again, you will have the exact location of that rising channel top through time. And it is one, once again, that can contain at least monthly, if not quarterly buying pressures when tested. It is considered a realistic objective, as is, I might add, that upper 140s, low 150s. I consider that to be a realistic objective, except it's, ultra long term. And so, this is a stock I think you can kind of put in your back pocket and let it play out over the months ahead. Now, where am I wrong? And, I'm actually going to be probably shooting an instructional video on this not long from now. There's an adage that I've used for years, which is to say that if the stock closes the week back below 99.42, that would be considered a failed long-term buy signal. And any failed long-term buy signal is, in essence, a valid sign of weakness, at least near to mid-term, possibly long-term. And so I guess what I'm saying here is if you buy this stock based upon this this analysis, and you buy it in the 99 handle, so to speak, if we close the week this week below 99.42, I keep saying this week because the week that I'm recording this is the week of January 25th, but wherever that formation is, if we close clearly below it, and I want to say by a 1% margin, closing back below that formation by a 1% margin would be a no-go. It would be a failed long-term buy signal, and in essence, it would be a sign that you should probably get out. Now, if you don't get out, please get out below this formation. And this is a short-term structure. It will remain valid so long as last week's high remains there, which is 101.19. So if this stock falls back this week, closes below 99.42, and you're long this stock, there is definitely no good reason to be long this stock into later year if it closes below 91.70. That is the week of Monday, January 25th, which rises once again 4 weeks later to 92.62 the week of Monday, February 22nd. Now, a little thing about this channel bottom that I'm talking about, if we continue to push on to new highs, which I am expecting, this channel structure needs to be continuously recalibrated. So it is good as I speak now, but all we have to do is push upward and onward beyond that 101.19 high from last week, and this structure gets recalibrated. So I'm just throwing it out there more for instructional purposes and also for, kind of a worst case scenario, that if you're caught long in this stock at 99, let's say you buy 99.50, then you don't stop out with a weekly settlement below 99.42, which I would advise you to do. You should, at worst case, stop out with a settlement below this structure presently at 91.70. I think that that's all that needs to be said. I'll leave you with this image, which is really the underscore of what I'm saying. Long-term buy signal in SAIC Applications International Corporation, elicited last week. This is brand new. 99.42 is your base of support. Climbs to 99.61 by the week of Monday, February 22nd, and expecting continued gains well into 2021. I think the 123 to 127 formation that you see here is likely over the next few months, 3 to 5 months at the most, and then ultimately we could, by the end of 2021 or sooner, reach into that 148.15 to 151 even area, which overall would represent a 50% gain on this particular stock. That is all I'm going to say for this particular Wicked Signal video on SAIC Applications International Corporation.